Long-term analysis of Tesla. Is it a good stock to buy for the long term? 2025, 2027, trend analysis, fundamentals, technicals, and more. Remember to read the disclaimer right here and in the video description below. What we're watching right now here on the screen, the price action obviously for the long term, the daily chart, and also market cap right here below. Interestingly, you can clearly see the stock is very volatile. As in January 2023, it's like the stock had a market cap of 366 billion, and the new highs established back in December 2024, which it was insane. After the elections, the market cap was 1.53. I mean, that's completely nuts. The volatility, the change in market cap in 1 year, in 1 year and a half, completely insane. But the key question here is, will this volatility continue? Well, from we can clearly see from the chart, it's doing exactly that. It dropped from 1.53 till 773 billion. That's like a minus exactly see the percentage, minus 58%. That's completely nuts. And this is the volatility we are facing here with Tesla. The problematic thing I would say, we go to the fundamentals. The problematic thing I would say is like the net income. It doesn't look good. It doesn't look good. If we go actually here and look at the net income, it's been increasing and that's good. But the problematic thing is like we are not making new highs in terms of net income. The best results ever were it was in December 2023, nearly 8 billion. That was a key moment, but it was like something, that is not the usual thing. The usual thing at that time, 1 year ago, it was 2.2 billion, 3.29 billion, something around that number, 3.77 billion. That's the numbers we were getting a couple of years ago. But right now, we're getting like worse numbers than that. And not only that, I would say, and it's just like common sense, in the US market, maybe it's working great because they don't have so many competitors. But in Europe and in China, they have so many competitors right now. With EV, the EV market is flooded, with EV vehicles right now, with from any brand you get. And in Europe is very popular. I live here in Spain, and I can tell you guys that you buy a used car, and you check the brands. You see like we have like nearly 70,000 vehicles only from brands such as BMW, Mercedes, and Audi. These are the three brands that are very very favorite, and actually the most the best cars in terms of if you want to sell it at a better price. Obviously you're not gonna get the same amount that you paid for it at the beginning, but you're gonna get like a fair amount in comparison to other brands. And then you go to Tesla and you have around 500 cars in the US market, and that's the thing. Obviously these are new cars. Tesla is a new brand, but the thing is like these numbers are increasing every year. Every year you are getting even more better numbers in these three brands: BMW, Audi, and Mercedes in used car and new cars as well. But in Tesla, it's not happening. We are getting better numbers yet, but not that big. So the growth in Europe in terms of the vehicle industry is just these three brands. Is that they are the favorite ones in terms of net income. Obviously, they are making the best profits also. And then we have China, and with China we have companies such as NIO, we have companies such as BYD, and then another one that is like very very popular as well. That I don't remember the name right now, but very very popular brands, and they are releasing incredible vehicles as well, EV vehicles, EVs, and that's the thing. They have a lot of competitors, and if we go to the financials, you're gonna see it. You're gonna see right here that that the data is just confirming exactly that. So here we have Tesla annual income statements, and then we go to United States, and you can see the growth there. It's there. Obviously, look at the growth. It's completely crazy in the last 6 years, but the last year it hasn't been so big in comparison to the previous ones. And then we have like the other international, which includes Europe, obviously, and then China. And you can clearly see in China, by the end of 2024, the revenue was less than the previous year, 2023, and in Europe also less. The only significant growth is in United States, and that's the problem because look at what's happening right now with all these riots and vandalism among that are, Tesla cars are being targeted right now. That won't help, definitely. But obviously this won't be reflected on the not these earnings that we have right here, that we have it in the next April 29th, but it will be reflected in the next one. All that is happening right now is gonna be reflecting, in 4 months time. It's something that you have to consider as well. But obviously the price action is already reflecting some of the impact that is gonna make, because obviously you're planning to buy a car, and you won't buy a Tesla, I can tell, at this point, at this particular moment, because you are facing the risk of getting your car like completely destroyed, and that's a difficult situation. Okay, let's go right now again to the forecast, because then we have the analysts from Wall Street. Then they have like an average, and that's interesting because they have to update this. Maybe it's not super up to date. But the thing is, like, we have 42 analysts from Wall Street, and the average of them, they think the stock should go up more than 52%. The most optimistic one more than 300%, completely insane, and the most pessimistic one minus 50%. So what do you think about the stock? Do you agree with this forecast, or do you think the stock should be trading around a different level? Leave your comments below. Also, we have analyst ratings right here, 57 analysts that are giving just the signals. It's like a strong buy, and then 12 strong sells. That's interesting. Because we have mixed opinions right now among Wall Street analysts at this point. But look at this. Look at the EPS and the revenue. Also very, very important. Look at that. The first quarter 2025, I think one of the reasons the stock is plummeting, not only because of what's happening right now, but just the data. What I'm suggesting is exactly that. The first quarter is not always the best, but it's gonna be, I would say, with the estimate is 0.49, which is the same estimate as the previous year. But the key point is like the reported earnings at the time was worse than the estimate, and it could happen again. And if it happens, it's gonna be difficult, to see Tesla making new highs at that point. The only thing that we have, and that's interesting data, because I think it's not taking into account the competitors, the EV competitors that they have. It's like the forecast right here in the EPS and revenue annual income statements. By 2020, by the end of 2028, they're gonna have like a 6.59 billion. No, I'm sorry, 6.59 of EPS. I don't know if it's gonna happen, because a lot of things has to happen, but I don't agree with this, and this is my opinion, of course. Just common sense, I mean, at this time, in these previous years, they didn't have competitors. They didn't have them, and right now they are flooded with competitors. Or they all have like a portfolio of EPs, all these brands around the world, especially in Europe and China. So that's just gonna impact the business somehow. It has to be reflected in that sense. To get this 6.59 of EPS, it would mean, like, the increasing the prices double from current levels if they don't sell more vehicles at this point. That's the things that I don't agree. It's complicated. It's complicated to see this number happening. But similar numbers, we could get that. I'm realistic. I mean, Tesla could make similar numbers as the current ones. For instance, they could get like a similar EPS 2.42, which is a little bit worse, by the end of 2025. And then we'll see in the coming years. But I think at least in the short term, this could be feasible. 2.67, 2.40, it could be feasible. But a lot of volatility is going to happen, obviously, and it's going to be impacted as well. And all that is happening is going to impact the business. So I don't think 2025 is going to be a great year for Tesla. In that sense, maybe it's better just to wait, and to buy at a better price to see the best opportunity. For that, we have the RSI and MACD, and we can go to the weekly chart, and we can activate the logarithmic scale. And as you can see, it's better to buy Tesla at the lower levels, at the lower levels right here. For instance, in January 2023, those hold the stock, and they got like a performance up to 370%, and those who bought the stock right here, between February 2019 and October 2019, they enjoyed like an upturn of more than 3,000%. So if you are patient enough, to wait for these levels to see them, happening, you can get a lot of performance with the stock. But at this point, you have to wait a little bit because we are not there yet. And actually, this signal it happened 1, 2, 3, 3 times and a half, I would say. So in the last 10 years, so it's not a common signal, but when it happens, is the best moment to buy the stock. It is the theory of love. Of course, as long as this revenue remains the same, because if we see that the revenue dropping every time, it's gonna be difficult. That's the truth. So thank you very much for watching this video. I see you in the next one. Remember to subscribe to TradingST to watch more content like this, and remember to subscribe again. Subscribe.